The spot market in uranium is small, it's discretionary, it's non-fundamental. I mean, as 2024 ended, something like 55 million pounds of uranium went through the spot market. Utilities bought 7 of that. That's it. And of the remainder, a lot of it is just churn. It's the same material going around and around. So you didn't have the demand building in the term market, and yet you had some people, for whatever reason, show up with material to sell. I mean, January began with a producer who's restarting an asset, trying to sell 200,000 pounds in the market. In a non-fundamental, discretionary market where utilities aren't focused, it's a dumb idea. It's a dumb idea every time.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me as Triangle Investor from social medias. I'm delighted to have Executive Vice President and Chief Financial Officer for Cameco Corporation, Mr. Grant Isaac. Thank you for coming to my show. It is an honor to have you here.
Oh, that's kind of you. Glad to be here.
Thank you. With 2024 behind us, I believe we could see a very interesting 2025 for uranium. And I would like to cover market-related topics first with you, specifically price performance in 2024. Prices were spiking across the nuclear fuel cycle, but the price of uranium stalled. Why is that, Grant? If we can explain to our audience.
Yeah, I think there are a couple of reasons. And this is for those who have heard me drone on about the market before. There'll be no surprises in my comments. First thing to always remember is that fuel buyers buy backwards. They start downstream and they work their way up to the uranium. And quite frankly, 2024 was a year where there was a lot of focus downstream, whether it was the legislation to ban Russian material from the U.S. And then no sooner did the legislation get passed, it then was followed by a waiver process that everybody had to figure out, and that drove a lot of attention. And then as we were just starting to understand how the waivers was going to work, the Russians put a voluntary export restraint on EUP going over to the U.S. 2 shipments missed. A third one may be sailing from St. Petersburg soon. We're not sure. There seems to be some troubles with the permits. A lot of reasons for utilities to be focused downstream, focused on their enrichment, focused on their in-process material between the enricher and the fabricator, between the converter and the enricher. And of course, a lot of focus on enrichment drives a lot of focus in conversion as well. So that's kind of the main reason. There just hasn't been the demand we've seen downstream hit uranium yet. They're distracted for very good reason. Second reason is really unique to the uranium market. And again, people have heard me say this over and over. The spot market in uranium is small, it's discretionary, it's non-fundamental. I mean, as 2024 ended, something like 55 million pounds of uranium went through the spot market. Utilities bought 7 of that. That's it. And of the remainder, a lot of it is just churn. It's the same material going around and around. So you didn't have the demand building in the term market, and yet you had some people, for whatever reason, show up with material to sell. I mean, January began with a producer who's restarting an asset, trying to sell 200,000 pounds in the market. In a non-fundamental, discretionary market where utilities aren't focused, it's a dumb idea. It's a dumb idea every time. And I don't know how many times we have to say it, but spot market will be under pressure if there are those who have productive assets and they don't do the hard work of building a home for it. Because as soon as the market catches wind that a producer has material to sell, everybody backs up, and that producer ends up chasing and chasing and chasing. And we can see $4 moves in the market downward. It's nonsense. It's the type of behavior that shouldn't occur, but some continue to do it. That's why we are focused on the term market. We don't sell anything into the spot. Doesn't make any sense. The demand isn't there. So demand distracted downstream. And unfortunately, some silly supply hitting the spot market. And by the way, we're not talking big volumes, Lucian. We're talking, 50,000 pounds of uranium now instead of 100,000 pounds is becoming a typical lot in a world that consumes 180 million a year. It's just insanity. But, it happens in our market. And I just counsel people, stop getting caught up in the spot market dynamic. Look what's happening downstream. That's coming to the uranium segment.
That's a great overview, especially you covered 2024 very good. But Grant, I want to hear the current sentiment today and the activity on spot market and term markets with the fresh data. How are the contracting volumes right now in the spot and term market?
Yeah, so we don't think of the spot market as having contracting volumes just because they are supposed to simply be spot transactions. We always think of the term market in two dimensions. The first is, what are we doing as Cameco off market? How much interest do we have exclusively bilaterally with global utilities? And people have heard me define that as our pipeline, and our pipeline remains very strong. We got a lot of interest in our future production. I wouldn't say we have a lot of appetite at Cameco to commit that future production in today's market. We want to see better terms and conditions. So we're being patient. We're patient with our supply. We're equally patient with our contracting. So for us, things are looking good. We're seeing a lot of interest in uranium. We just want to see better terms and conditions before we part with it or agree to part with it. In the broader industry, I would say, and you've heard me say this before, it's always a bit risky to generalize the behavior of all fuel buyers, but I'll go ahead and try to do it anyway. If you think about that fuel buying community, there are some who absolutely see the structural gap coming. And it's crystal clear to them, and they're the ones who are moving. They're the ones who are contracting uranium. They're the ones who are pushing up that long-term price of uranium, $80 a pound US. They're not paying attention to the spot market. They're looking to secure their long-run needs. Then you have a group that don't want to be left behind. So maybe they don't quite see the structural gap, but they also don't want to be the third or fourth in line contracting, because contracting always creates price pressure upwards. But make no mistake, there are a group of utilities out there who are taking an opposite bet, right? And we know this because we're not at replacement rate contracting. And this would be a group of utilities who go, Cameco, you're being greedy with the price of uranium, because there will be peace in Ukraine, and we all hope there's peace in Ukraine. I mean, make no mistake. And they say, and when that happens, Russians will be back in the market. And at the same time, look in your backyard, Cameco. You got all these new mines that are going to be producing, and they're going to be producing at a lower operating cost than you. And the capital is a fraction of what it cost you to build mines. And then we got all these restarts going on in the US and in other parts of the world. And I'm well covered till the end of the decade. So I'm just going to wait until you're back competing with Russian material and all this new supply from the Athabasca Basin. That clearly is the sentiment from some of the utilities, because they hear the hyper promotion of the juniors. They hear the folks that are saying they're going to build a greenfield mine and mill in 3 years, and they don't yet have a license and a permit, right? But the utilities aren't immune to the hyperbole that's coming from the junior space. And they sort of assume, well, some of it must be true. And if some of it must be true, it's coming my way. So there's an overhang being created in a future expectation of the market for some. I'm quite happy. I'm very happy to take the opposite bet. And for those utilities, we simply push our business card across the table and we say, when the world doesn't work out that way, you can give us a call. Here's our number. And we just simply point to, look, the structural gap we're talking about does not require a single new data plant to be built. It does not require a single SMR or advanced nuclear reactor. That's just the structural gap from the known requirements. All of this hyper stuff is upside to the demand case, and it just makes the structural gap bigger. But we don't need it to have a structural gap. So we just look at it and we say, we've seen these markets before. We've seen these attitudes before. We can be strategically patient because we're not a uranium-only producer, and we will get value today in the historic conversion market. We'll get value today in the fabrication market and the reactor service market. will participate in the appetite for new builds, and we will be strategically patient, waiting for that uranium demand to hit, because it is the product for which there's no substitute, and that demand has to come.
Yeah, excellent point. I was telling to the people as well that AI and SMRs are just a bonus, and they are
Yep.
really just a bonus.
Well, and a massive bonus, like,
Yeah,
if you think about, they're more than an accelerant on the fire, right?
yeah, totally.
They are exponential in the energy demands that they're deploying. But I think what we always have to remember when, when the deep seek news came out and the uranium market traded down like the hyperscalers, you have to remember the structural gap we're looking at does not require that demand, right? You know, people talk about, okay, well, there might be setbacks to licensing of SMRs and advanced nuclear reactors. Doesn't matter. It's not in our demand forecast yet, and we still see a structural gap. So, we two things. We can't get carried away watching the day-to-day of the spot market, because that's not telling you anything other than there's a bunch of desperate people churning material around the front end of the market. And don't get carried away thinking nuclear is only attached to the data story. And if the data story slows down, nuclear slows down. That's not true either.
Yeah, agreed. Grant, current hot topic is definitely tariffs. Energy resources from Canada will have a lower 10% tariff. How
Yeah.
could that impact your business if it
Well,
will?
and again, I'm sorry to always do this, but let's talk about Cameco and let's talk about the market. From the market perspective, and let's call tariffs what they are, taxes, right?
Yeah, yeah,
So taxes are going up. Taxes are going up on Canadian uranium, maybe, if 30 days from now we decide that that's appropriate. Um, Taxes are going up. Now, what we know from volumes and volumes of economic history and trade data is that effectively means the global price of uranium is going up by 10%, or let's call it 9.5%. Why? Because if Canadian uranium is suddenly 10% more, non-tariffed countries are going to raise their price by just under 10%, right? That's the way tariffs work. It's why they're not a particularly smart piece of trade and fiscal policy. So across the industry, I think what we need to understand is tariffs are taxes. Taxes on uranium mean the prices will go up because those who don't face the tax will grab the windfall. In fact, they'd be foolish not to. So non-tariffed countries, Australia, Kazakhstan, Uzbekistan, should be increasing their prices to just under 10%, right? That would be so. We know the price of uranium is structurally going up because of this across the industry. That's going to happen. For Cameco, a little bit different. We learned a long time ago with the Section 232 investigation in Trump 1.0 that the days of believing in North American free trade were probably over. That our neighbors discovered the hammer tool in the toolbox and seems to want to use it. So we began a process of risk mitigating, and that's going to be a common theme in our conversation today. This is what we do at Cameco. We have a long-term view and we mitigate risk. So we began to write contracts that clearly specified that a tariff was a tax, and a tax in the buyer's market is the buyer's responsibility. Tax in the seller's market is the seller's responsibility. So we've got a number of contracts that are absolutely crystal clear. The price of Canadian uranium is going up for the US utilities. For older contracts, where maybe there was a stronger presumption of free trade, and we didn't tie the tariff language to the tax clause as closely as we should have, because we assumed that it wasn't something we were going to have to worry about. We'll take other steps. We've moved material around such that we could make deliveries under those older contracts, and that material is technically already inside what would be a tariff wall. So really, the impact on us, we've risk mitigated like we always risk mitigate, but the industry itself is just going to see structurally higher uranium prices because the rest of the world is going to fill in the gap between the tariff on Canadian and the windfall they can grab if they're a non-tariffed country. That's how tariffs work.
Yeah. Grant, where do you see or where are global inventory levels today? in your
You've heard
opinion?
me say, yeah, you've heard me say many times, and you and I had a conversation about this in London at the WNA.
Yeah.
This has long not been an inventory story. You always think about supply, you think about it as the primary supply stack, what's coming out of mines today, what's coming out of mines that could be restarted, what's coming out of projects that are, still in the permitting and licensing and have all their greenfield spend in front of them. That's the primary stack. But as everybody knows, there's always been this secondary supply of material in our market. And where did this come from? Well, if you go back to the origins of nuclear power, when it was going to be too cheap to meter, there was this expectation there was actually going to be thousands of reactors running around the planet. And in anticipation of that demand, the supply side front ran the demand with investments in supply. A lot of uranium was explored for, it was found, it was dug out of the ground, it went into various forms of processing, and then it was stuck in inventories. Some of those inventories were producer, some of them were utility, a lot of them were government inventories. And this has been the backdrop for the secondary supply that's always been this shock absorber in our market. Of course, the most notable one was the massive program to downblend weapons grade HEU material into LEU material to make available for the US market, of which Cameco was party to for the entire life of that agreement. So now we're looking at a situation where demand is up on a requirements basis. You've got a lot of uncertainty around primary production filling that gap. As the demand is being delayed, it's pushing it out into a more uncertain window, and that shock absorber of secondary supplies simply isn't there. If you look around outside of China and outside of a handful of utilities in Japan, there is no utility that is at its strategic inventory level. They're at or below. So now we have to add to the demand the notion of some one-time inventory buying, but let's be careful. It's one time, it's not recurring. But if that comes in a wave, that will have a disproportionate impact upon what you asked about earlier, the rate at which utilities are contracting. They'll sign long-term contracts, buy for their run rate requirements, buy a bit more for their inventory build. That's a positive case for the demand side of the business. So those supply sources that have always been there to fill the gap, they simply aren't there. And the last pocket of material that you could identify as kind of that material size is Russian. So it's actually out of the Western market anyway as part of the legislation to ban the Russian material. So I've never felt better about the primary secondary supply dynamic against demand. It's in fact, if you think about it, never been better at any point in the history of the commercial uranium market.
Yeah. Yeah. Grant, do you see a scenario where utilities or even tech companies directly invest in uranium miners, securing their own production?
I don't know. I mean, I would be the last person to speculate on what our customers are going to do. Utilities have invested directly in uranium before, and I think roundly believe that didn't work out very well. And so the way utilities invest in uranium miners is through long-term contracts. I mean, that's the purest form of investing in a steady supply. But participating in the risk of a mining company seems to be outside the appetite of most of the utilities. And then the customers, I mean, we hear from the hyperscalers and we hear from the chip manufacturers and we hear from the folks that are looking at onshoring big amounts of electricity demand because they want to know where the nuclear is coming from. They want to know how nuclear can grow. So they want to know Westinghouse's role in that, but then they want to know where the fuel is coming from. But I'm not detecting an appetite to invest in that part of the segment other than long-term contracts. And so we'll watch these models evolve. I don't think there will be a one-size-fits-all model for the hyperscalers, for our customers. I think Microsoft has clearly signaled to the world they're most comfortable working in the existing channels, working with Energy Northwest or working with Constellation to restart the Crane Clean Energy Center. And those would be normal buying channels. Constellation would be buying the fuel under the long-term contracts for which we're very familiar. But I would say some of the other hyperscalers probably have a greater appetite to do it themselves. And so we'll have direct supply agreements with nuclear fuel cycle companies. I don't know if that means going a step further and investing in the resource, but the ones we talk to sort of understand just signing a long-term contract with a company like Cameco, who's never missed a delivery and mitigates the risk for them, is actually probably a lot better of a proposition. So we have this incredible incumbents advantage because of our strategic position across the nuclear fuel cycle.
Yeah, of course. Grant, how does Cameco determine when you will procure uranium from the market rather than obtain swaps or loans?
Good question. By design, we are always overcontracted, right? We always sell a bit more than we produce. This is on purpose. Of course, when we were in extreme supply discipline, coming out of the Fukushima bear market, we had an extreme overcontracted position. We had 70% of our production shut in. Today, we have 30% of our production shut in. We're not running our tier ones at full capacity, and then we have mines in care and maintenance. So we have a lot of brownfield leverage if the time is right. And this is all factored into that. You got to get the marketing right. You got to focus on that term demand. You got to capture that term demand. And then you've got to let that drive your production decisions. Because if you drive production decisions and don't have a home for it, you're one of the people chasing the spot market around, which is just a value transfer from the pocket of your investors to the pocket of the utilities. And why investors put up with that, I will never know. By virtue of having an overcontracted position, it means that we do have demand to deploy. But we only deploy it, Lucien, in the context of a broader multi-year risk management. Like we have production, we have the ability to buy in the spot market today for delivery today. We have the ability to buy in the spot market today and have somebody hold it in a carry trade for us for future delivery with the ability to access that material whenever we want. We have material at our facilities that's not ours, and we have the ability to borrow that. We always have the ability to go to a utility and move deliveries around if we need to. And then, of course, that always buys us enough time that if there was a production shortfall, we've now remediated it and we have it back, right? So we never manage the company so that we have to be in the market at any one moment buying. Having said that, I have no problem buying in the market. When we show up to buy, there's a response. But what we do not do is play the role of buyer of last resort. If there's a producer out there and they haven't planned things accordingly, or they decided that a spot strategy was going to be a really smart idea, they'll often phone us and they'll say, hey, I've got 200,000 pounds to sell. And if you don't buy it, I'm going to put it in the spot market. And I'll tell you, our answer 100% of the time is put it in the spot market then. You'll push down the price. You'll get a lower price for it. I might buy it at that lower price. And when the market corrects back up, I'll take that trading margin. But if we start rewarding that kind of behavior, it will continue. So we buy within a very strategic risk management framework. We buy visibly sometimes. We buy quietly sometimes. We never leave ourselves in a position where we have to flop around and chase the spot market. That would be an irresponsible way to handle an overcontracted position.
Yeah, you have many pounds in the ground as well, reserves, resources, and I believe that you have more than that you are contracted. Is Cameco sold out for many years to come? That's my main question.
Yeah, it's a great question, and I suspect what's behind it is there is narrative out there that there's this great opportunity in some of these Athabasca juniors because we've sold more than we can produce. This is one of those times where being an incumbent producer, and really the only meaningful incumbent producer in the West, requires us to be the adult in the room. And as the adult in the room, we have to recognize your very first question, which is the market hasn't woken up to the structural deficit in uranium yet. We know this because we're not at run rate requirement demand in the uranium segment. So we know the last thing the market needs to hear is our growth potential. So we don't talk about it a lot. We don't talk about the fact we have the best land position in the Athabasca Basin. We don't talk about the fact that our land position in the Athabasca Basin, pounds we already own, already know, are highly leveraged to existing infrastructure. So it goes through our facilities and takes advantage of our licensing experience, our permitting experience, our impact benefits agreements, our skilled labor, our long-term relationships with our contractors. We don't talk about that a lot. We don't talk a lot about the brownfield leverage we have in our existing operations, another 30%, because the market doesn't need to hear that. It's not ready to hear that. And it's impossible for me to talk about our growth and not have the utilities to hear it. So we are in supply discipline because we want to be in supply discipline. We are in supply discipline because strategically, that's what makes the most sense to our owners in terms of maximizing the value of the uranium segment within our set of assets. But make no mistake, Cameco is not sold out. And our leverage to a future robust Western uranium cycle has never been better. We do not require the acquisition of anybody's junior project in order to fill in our own pipeline going forward.
Fair enough. Grant, I want to hear your update on the joint venture Inkai. Production resumed at Inkai as we saw the press release a few days ago. You and your joint venture partner are in the process of determining the impact of the production suspension on the operation 2025 production. So how long before we will know more?
Yeah. The good news is it's back up and running, as you said. Whatever paperwork challenge there was, it's apparently been resolved. The determination or the finalization of 2025 numbers and then ultimately the 2026 guidance, which Kazatomprom normally would be putting out soon, that's not a JVI issue. That is a whole of Kazatomprom issue. Like the challenges that we've been talking about and our very good partner Kazatomprom have been talking about, the acid challenges, the piping and casing challenges, the drilling, submersible pumps, the transport challenge, all of that is just making it very difficult to plan production in a reliable way that we had all become accustomed to in Central Asia. So it will take time for them to figure out exactly what the impact will be. The good news about the mine is the pounds aren't lost. They just might fall over December 31st. But of course, for us, when you think about it from a risk mitigating point of view, from your earlier conversation, there's no tyranny of December 31st. We risk manage right through year end because that date doesn't really matter. It matters from a financial reporting point of view. But as long as the pounds aren't lost, delayed pounds are fine, because if you believe in the theory of a rising price environment, the delayed pounds are actually worth more to you in the future anyway, right? Especially if somebody's going to be slopping small amounts of material into the front end of the spot market today, and I get tier one production that's worth more later. Sounds like a pretty good trade. We'll take that every time. But it will take time for the world to understand exactly what the productive capacity is in Kazakhstan writ large. So that's not just a JVI issue. That's 45% of the global supply of uranium that has a big uncertainty over it today, as well as has lost the reputation of reliability a little bit.
Yeah, I get your point, but do you foresee any other challenges? Is Cameco still in the compliance with all aspects of the Kazakh subsoil code?
We think we are, and we think we always were, actually. Um, you know, I think we can't, we can't, I don't think we can disentangle the challenges that we see from the perhaps the turnover that we've seen in the leadership at Kazatomprom, right? In order to solve big multi-year challenges, you've got to make big multi-year decisions. And it's hard to do that when there's a new person in the role,
Yeah.
every year or two. And the conditions aren't conducive to be making those big long-term decisions. And if those get deferred, it just means the challenges last longer. So for us, we don't look at it as a JVI issue per se. We certainly don't look at it as an anti-Cameco issue. We got a great relationship with Kazatomprom. We were one of the first, in fact, we may have been the first Western investor to flip the joint venture to their operatorship because we were the first to recognize how good they had become as an operator. So our relationship is very strong with them. We just understand that the challenges they're facing will not be solved in a week. They won't be solved in a month, and they're probably still measured in years, which adds to the structural gap that we were talking about
Yeah.
between demand and supply in uranium.
Yeah, one other question related to Kazatomprom. Is there a real physical shortage of sulfuric acid for their operations, or is it politically induced shortage, impossibility to source acid from Russia because of the sanctions?
Yeah, I wouldn't say I'm the expert on this, but I'll tell you what we hear. So, what we hear is that if you look at the various sources, the stuff they can produce themselves, plus the stuff they were buying from other sources in country, plus what they were buying from Russia, every piece of it has its own story. You know, Sanctions against Russia means that some of the precursors and catalysts to producing it in Russia aren't available. And that creates a shortage in Russia, which, of course, Russian demand is always going to come before Kazakh demand. Some of the domestic supplies that weren't Kazatomprom's have alternatives and had customers willing to pay more than Kazatomprom was willing to pay. And therefore, that supply has been contracted away from them. And then the performance of their own plant, it's not that that's in question, but with each well field, you need more acid. And if you're going to talk about bringing on a brand new field like Budenovskoye, you've got to saturate that whole thing up front and wait 18 months before you're starting to produce at a time when your Russian shortage and your domestic shortage means you're struggling to meet the needs of the cash flowing assets that have a demand for acid that are paying the dividend
Yeah.
back to the state. So it's a real challenge as far as we understand. Now, it's not the first time. Go back to 06, 07, 08, there was an acid shortage in Kazakhstan, and Kazatomprom solved it. And we expect the operator will solve it again, just like they did last time. But the conditions for solving it and the decision making required is why I conclude it's not going to be solved in a week or a month. It's still probably measured in years before it's solved.
Yeah, you're probably right. Moving to our Saskatchewan operations, how long will it take to McArthur River Key Lake to expand to 25 million pounds per year from a goat
Yeah.
decision?
Yeah. And let's, if you don't mind, let's start with the go decision. Let's be
Sure.
absolutely clear about this. Remember when I talked about where all that secondary supply came from? And I said the reason we dealt with all the secondary supply for so many years in our industry was because the supply side front run the demand, right? So if there's a lesson to learn, it is don't front run demand with supply in the uranium segment because there's never meaningful in year demand from utilities. In fact, next year doesn't have a lot of meaningful demand because they don't run their plants that way. So the go decision is really we need to see more demand to come to the market to firm up the types of terms and conditions that we would want in order to move to 25 million pounds a year and to firm up the terms and conditions that we would want to consider restarting Rabbit Lake, or to firm up the terms and conditions we would want to restart our US mine. So that the predicate for the go decision is more demand has to come to the market. We're strategically patient, and we're not going to front run that demand with supply, because that is never value creating. Having said that, we want to be prepared for that decision. So we're doing the work, we're doing the evaluation at the mine, at the mill, to try to figure out, once that go decision is made, what is the time frame to deploy the capital and achieve the higher rates, because those factor into the commitments that you're making out into the future. And remember, the wonderful thing about long-term contracts is, if we signed one today, Lucien, we probably wouldn't start delivering for 2 years, and maybe even 3 years from now, which means we always have this built-in runway, right? As that demand comes and we start securing it and pulling it into our future commitments, we always have this 12, 24, maybe 36-month runway to prepare the assets for production. So I guess what I'm signaling is, when we make the go decision, we know we will get the increases within that runway. We just haven't made the go decision yet.
Yeah. What about Cigar Lake? What is the status of Cigar Lake and plans for the extension?
Yeah, happy to say the extension is actually now part of the mine life of Cigar Lake. So we always used to call Cigar Lake Phase 1 out to 2029, and then there was always this Phase 2, but it wasn't part of the life of mine plan. Now the life of mine plan and the most recent technical report has everything wrapped into it. So you can just think of Cigar Lake as on an extension path. That asset is going to run till 2036, subject to if there's any exploration success around the Cigar Lake infrastructure. We would look to extend it beyond that. But at the moment, that's the plan on Cigar Lake, and it's going to plan.
Okay, are you already looking at where production will come from when Cigar Lake and McArthur River run out of ore?
Yep, this is tied back to my earlier comment that we don't spend a lot of time talking about our growth story and our replacement story, because quite frankly, the market doesn't need to hear that right now. Back in the 06-07 price run up, we came out with a W strategy as Cameco. And we took all of our projects and we put them on a Gantt chart, and we showed, as we begin to work on them, here's where production would come from. And we'd go from, at the time, 20 million pounds of production to 40. And it was a great message for investors, because it really crystallized the growth story. And it was 180 degrees the wrong message for utilities, who said, oh, I knew the pounds would be there. I knew you'd go ahead and invest. I knew there would be growth in this industry. We're just not going to do that this time. So we don't talk a lot about our growth, but make no mistake, when Cigar Lake is done, that's an 18 million pound per year problem for the market. It's only a 9 million pound problem for Cameco, because our joint venture partners are not our problem once Cigar Lake is done. So no surprise, we know where we can get that 9 million pounds to replace our share of Cigar Lake when it's done. What I would prefer to see is I will talk about those growth options when the market price of uranium understands it has an 18 million pound per year problem, which I don't think it does at the moment. And of course, if we start thinking about running McArthur River at 25 million pounds a year, guess what? The market's got a 36 million pound per year. Well, it'd be more than that, because we'd be running at a 25. So the market's got a 43 million pound per year problem. And that's not priced into today's market. So again, we've seen all of these cycles, every commercial cycle in uranium. We've seen how they build up. We are choosing now to be strategically patient rather than try to rush in and front run demand with supply, because I don't control when that demand comes to the market. But I can sure respond to it for maximum value creation.
Okay, are you interested in development of JVs or only acquisition of proven operational assets going forward?
I'm just interested in value creation. And And right now, and this isn't new to this cycle. It isn't new to this cycle at all. But right now, I don't see anything out there in the development phase that we could acquire that makes any sense at all. Um, there's nothing unique about uranium from a resource development point of view. Assets tend to be worth a lot when they're at the top of the promise curve. Usually with a DFS, or when they're cash flow and earning. But the path from the top of the development curve, from the DFS to cash flow and earning, is usually a very long and painful process where budgets are overrun and schedules are overblown. And history tells us in the uranium market, that's when valuations start to make sense. But Cameco never buys at the top of the promise curve. And we never put ourselves in the position to have to buy at the top of the cash flow and earning curve either. So we just look at our portfolio different. We know where our pounds are going to come from. We're open to a whole bunch of different models. We just see a bunch of assets out there that are not coming on that time frame. They're not coming on that schedule. There's a lot of hurt coming to those investors. And they're, at that point, our phone might ring because someone might say, hey, maybe we should call the only guys who actually mine in the Athabasca Basin.
Yeah, excellent. I want to hear your opinion actually on that. What do you think about the costs and the timelines, like you said, for the new big projects in the Athabasca? Are they realistic? I will not name specifically any companies, but are
You
they
know,
overpromised, unrealistic in general?
look, I get the game. You've got to distinguish yourself
Yeah.
somehow from a bunch of others, and generally distinguishing oneself requires all sorts of inflated adjectives, world class, elite, all of these adjectives that somebody who's never done it before probably shouldn't be using. That's one way to distinguish yourself. Um, but the other way is just to say you're going to do it better than anybody's ever done it in history. And the thing is, we don't have to take those views. What we simply do, and I mean this in a very modest sense, we simply apply our own experience. We apply our own experience, how long it takes to get licenses and permits. And we apply our own experience, how long it takes to build a greenfield mine, because we've done the last couple of greenfield mines in the Athabasca Basin, and to build a greenfield mill, and to revitalize a mill. And when people are proposing they're going to build a greenfield mill, the same size as McLean Lake, almost the same size as, or sorry, the same size as Key Lake, almost the same size as McLean Lake. And they're going to do it for a third of the mill's sustaining and replacement capital. Like it begs belief. But this is just an empirical problem. This will be solved by evidence.
Yeah.
And our view is there's a lot of hyper promotion, and we understand why. But we don't get caught up in it. We don't have to get caught up in it.
Yeah, definitely. You don't have to. We didn't touch much on conversion, enrichment. I would like to hear your opinion on that as well. Are the conversion bottleneck keeping some utilities from contracting conversion, enrichment, U308?
The linkage, the U308 linkage to enrichment going through conversion is an important one. If there was more conversion service available, and utilities could access more UF6, it could actually create an overfeeding scenario among the enrichers, which of course is net more demand for uranium and conversion, until such a time as the enrichers have built out more capacity and can get back to the type of operating tails they want to be at. So there's no doubt that conversion is a bottleneck, but it's not what's holding back the uranium demand, if you will. I mean, conversion's a bottleneck simply because supply discipline in conversion started 3 years before it did in uranium. So it had a head start. Cameco canceled the toll converting contract with the Springfields Westinghouse conversion plant, at the time Westinghouse Toshiba, in the UK. We canceled it because the conversion price was falling. And then we toggled back our Port Hope facility, and then Converdyne shut down. So we found ourselves in a situation where, two of the four Western facilities were shut in, and one was running at half capacity, ours. So supply discipline had a head start in conversion, and therefore it's had a quicker price response than uranium has, or let me say a more recent price response than uranium has. So now we've seen the kind of spiking that occurs when above replacement rate contracting hits the market, when folks realize their strategy was wrong. And I think learn lessons in conversion. Utilities, we couldn't beg them to pay $15 to $20 a kGU for conversion in an $8 conversion market in order to keep production going. And they were absolutely determined not to overpay for conversion in an $8 market. There was no way they were going to pay 15 to 20 because the price was only 8. So fast forward today, congratulations. That was a successful strategy. They're not paying $15 to $20 a kGU for conversion. They're paying $45 to $50 a kGU because the longer you hold prices down to a level where it's destroying its own supply, simply the more violent the reaction has to be on the price side to get back into an investment climate. So what's gone on in the conversion space is very, I would say it's a pretty good example of what needs to happen in the uranium space. The longer we stay below greenfield incentive pricing, well, the higher we have to be because we're going to try to buy time, and buying time is always a price function.
Yeah. What is the status of global laser enrichment? Has commercial pilot scale demonstration begun?
We're in our quiet period, as you know, so not a lot of new updates. So let me just maybe a bit more of a framework, if you don't mind.
Sure.
With respect to GLE, we continue, along with our partner, to be very excited about it. The world needs more enrichment. That part's pretty clear. The Western world is looking for technology diversification because Orano and Urenco get their centrifuges from the same factory. It's the same design. It's the same technology base. And supplier diversification. It's really a Western duopoly right now. So there's a lot of interest in a new enrichment offering, which is creating a couple of really attractive swim lanes for GLE, a mainstream down the fairway LEU enricher to replace the Russians. But we've also always had this deal with the DOE to re-enrich depleted tails. Started as a liability management cleanup program, but is now in a world of energy and national security when folks are realizing, hey, this is like an above ground mine that is actually disguised as a conversion plant at the same time. And we need both of those things. So obviously we like the path that's on, but we are not at the point of concluding TRL6 as a GLE is not. That's required in order to show that not only does the technology work, but it works at that nuclear verifiable level, that 6 sigma of reliability that's so critical, excuse the pun, in our industry. That is an important milestone, and we're not there yet. And then that becomes the point at which you can start imagining what does the cost advantage look like? Is it an OPEX, CAPEX cost advantage? What are the realistic timeframes for deploying the technology? And we just say, look, this is not happening inside this decade. That's clear. But even early 2030s is tomorrow in the nuclear business.
Yeah.
So timeframes are still out there a bit, and there's more decisions to be made. But the backdrop for GLE has never been more positive.
Okay. Uh, Final question, actually, your comment. I would like to hear your comment on the recent news on the Chinese uranium discovery. We don't have a lot of informations, but I would like to hear your take on that.
So a colleague of mine, Corey Koss, who's our VP investor relations, geologist by background, I think as most people know, and also spent time in Central Asia working for Kazatomprom as their director of IR. So is very familiar with that part of the world. I'm paraphrasing him, but he says, "Oh, this is the annual Chinese announcement about how they're going to meet all of their needs." So eventually we just kind of park some of those announcements. Like it's been decades when we were told Mongolia was going to be Kazakhstan 2.0, right? It's been decades we were told China is going to be Kazakhstan 2.0. It's been decades we've been told thorium is going to replace
Yeah, yeah,
uranium,
yeah.
or uranium from seawater is going to drive the price of uranium down to $2 a pound. Like at some point, you just kind of get numb to some of these recurring
Exactly.
announcements. And I think it probably falls into that category for me.
Yeah, yeah, agreed totally. That was Grant Isaac. Grant, I want to thank you for this chat. It was a great one, and I look forward to host you again.
Yeah, thank you. I really appreciate the time, and maybe see you at the next industry conference because we do a lot of that. Nobody does more conferences than our industry seems to do. So maybe we'll catch you at one of those someday too.